How's it going, everyone? It's Sam. I'm coming from Austin, Texas here today. And if you don't know, I come over to the TipRanks channel once a week to do a video talking about different stocks. Now this week, like I said, I'm in a new location, so I apologize for the lighting and stuff like that. But I want to talk to you about FAANG stocks, and I want to bring this up because we have earnings in about a month. Earnings are going to start kicking off, and there's going to be, I think, some interesting FAANG stocks to watch because right now, Facebook actually fell down about 4% yesterday, and it is at a pretty affordable PE ratio of 26.5. We have the other stocks too that are just trucking along. They're some of the best stocks that you can buy out there, some of the least risky stocks, in my opinion, of the tech stocks. So we're going to take a look at it here today. We're going to take a look at what they've done in the past, what their earnings growth is like, what their PE ratios are, and move on from there. Now, if you guys don't mind, hit the like button, hit the subscribe button for the TipRanks channel. If you guys like anything from TipRanks that you see here today, you can probably find it in the description of the video. So definitely check that out. You can get an unfair advantage with TipRanks Premium underneath the video. So let's start it off, right? We can see here how everything is laid out. Facebook is the most affordable at a PE ratio of 26.5. And you can go down the line, right? Apple's next, 28. Google, not bad at 30.2. And of course, this is relative, right? These are trading at a premium because a lot of investors see that these are less risky than a lot of other tech-related companies. We have Amazon and Netflix that are way up around 60 PE. Now, I want to take a look at why Facebook went down yesterday. So a lot of people don't know this or they didn't pay attention to it, but advertisers had a little bit of an issue recently when iOS changed how you could track online activity. So the new iOS containing these controls has been offered and you can actually opt out of ad tracking activity. This is coming from the Vice President of Marketing, Product Marketing. We've heard from many of you that the impact on your advertising investment has been greater than you've expected. So the cost of achieving your business outcome may have increased, and it's also gotten a lot harder to measure your campaigns on our platform. This is what caused it to trade down. Now, in my opinion, they face a lot of different controversies. Facebook does, from political controversies to tracking data, and they always seem to get through it. That being said, this is a big pushback. This is a big thing that happened that's really going to negatively affect their business until they can figure out how to get around it. I have no doubt that they will figure it out because they are making so much money. They are going to try to keep the gravy train running. We can see here, look at their revenue growth for the last 12 months. For the trailing 12 months here, we have 40% revenue growth. Before that, we saw everything from 20 all the way up to about 60% several times. And we are talking about huge amounts of money. That being said, their bottom line is also increasing at a very quick rate. Of course, we had a little bit of a dip back in 2019, but you can see that it's at like 60% net income growth. Over the last 4 quarters, they have been beating expectations too on earnings per share and revenue, beating pretty significantly every single quarter. With that being said, we can take a look at some of the other growth stocks on here. So let's take a look at Apple next, which is the next least expensive stock on this list, around a 28 PE ratio. They're growing, but Apple has its own issues, which is that they really need to continue selling and to continue pushing new products. That's the thing that people really feel uncomfortable with Apple about, is if they have a great quarter, that's great, but that means that they probably sold products that they would have sold the quarter after. At least that's people's opinions. So it's a never-ending push to sell more products in Apple. So you can see they have been growing pretty quickly. Also, net income has been going up pretty substantially. They do pay a slight dividend too. Looking at their earnings, they also beat significantly quarter in and quarter out. Q1 was pretty much a 10 out of 10, and then Q2 was also really good. From there, let's take a look at Google. Google's one of my favorite companies too. Look at their growth. We have total revenues growing about 62% in the last year, and their net income is growing a significant amount too, about 160%. Now, Netflix and Amazon are definitely more expensive when you're talking about PE ratios, We have larger businesses at Amazon. Amazon is just a conglomerate at this point, and Netflix is going to be a profit machine in the future. They're spending so much money on putting back into their content, but they do have some competition from the likes of Disney and Hulu and obviously Amazon. So that is just something to consider. Now, they aren't growing as quickly as some of these other companies, but you can see it's a pretty consistent growth rate. 20 to 30% year in and year out, which is nice to see for some investors. They just want to see steady increases. Then net income is kind of all over the place, but that's to be expected. Amazon, also a nice growth rate, 20 to 40% year in and year out. And they also are beating expectations most of the time. Of course, they did miss on revenue last quarter. So overall, you can take a look at the FAANG stocks. I'll put a link underneath the video. But Facebook is at a pretty interesting buying in point under 350. It's kind of been trading sideways for the last 3 months. In my opinion, this is not a terrible time to get into Facebook, but of course there's risk. Of course you have to do your own research. I'm not a financial advisor. I'm not a stock analyst or anything like that. So do your research. The price targets you can see here, there is significant upside for Facebook, about 21% upside according to analysts. But let me know your opinions on this down below. Thank you so much for watching. If you guys want to hit subscribe and the like button, it does help out the channel, and you can check out the link underneath the video to check out TipRanks Premium. Thank you guys, and I'll see you in the next one. Bye.